You're watching Know Your Insurance right here on SSP TV. We're back here at Allstate with Gary McNealis. The last show we were talking about homeowners insurance, and we really broke it down for you. We talked about specific items, right?
Yep. We talked about the dwelling. We talked about other structures. We talked about personal property. We talked about additional living expenses. We talked about liability, and we talked about guest medical. So, you know, there's I think what's left to talk about are, you know, what do we need to look for? You know, what can we do to prevent the disaster from happening? What can we do? We'll give you some tips on that.
How to save money.
We'll give you some tips on how to save money. Perfect. I think we got, you know, what can we do to prevent claims? And that's the biggest, I think that probably the biggest part of the peace of mind that we're providing. And that is, if you could limit your exposure on all angles, that's a big help. You know, you don't have a claim, and that's where you want it to be. So that's where we're
no claims, no aggravation, right?
Absolutely. Absolutely. So,
no worries. So what to look for? We're going to talk about enough coverage, and that's something really. Do people have enough coverage? I'm sure most of you sitting at home might not have enough coverage.
You know, that's such, Jeannine, it's just there's so much of this goes on a daily basis, because I have homeowner policies on the books here that were taken in 1950s.
Right.
And in 1958, things were totally different.
Right.
A home in 1958, well, I could tell you, my parents bought a home in 1950, and it was like $2,500 in McAdoo. You know, that same house today is, you know, 70, 80,000.
Right.
So things have drastically changed.
Sure.
Rules have drastically changed. Wording in policies have drastically changed. So you need to look, the first thing to look for is, you know, when did I update my coverage? When did I look at my dwelling coverage? When did I look at what it is that I own? When did I look at my liability coverage?
So you think every year, or you're suggesting every year that you look at that policy?
I would say to a client, look at the renewal. What does it say? Does it make you feel comfortable, or does it make you feel a little uncomfortable? And if it's a little uncomfortable, that's a good time to pick up the phone and say, okay, let's review this. Because not only is your agent, the right agent, going to give you right advice on coverage, but they're also going to say, let's see what we can do to lower this premium. In the last 5 years, homeowner premiums have increased drastically. And people are saying, wow, my income hasn't changed, but my insurance premiums went up. This is a perfect way to look at it. What has changed? First thing to look at, your deductible. You know, a $100 deductible is obsolete. Most companies don't even offer it anymore. But yet, we have probably 5% of our insureds who are still walking around with a $100 deductible. Now, changing it to $250, $500, or $1,000 or $1,500 would drastically change their premium. What is a homeowner policy intended to do? It's intended to prevent the disaster from happening, the financial disaster from happening, for the loss of fire, for the, you know, all the things that you know you encounter in life. I would say, you know, look at that. What would changing your deductible do to the premium?
So people have deductibles that are 100, and they're not even, they're obsolete.
They're obsolete. They're obsolete. And you know, when you think about it, the difference between a $500 deductible and a $100 deductible could mean the full $400 over a year's time.
Right.
It's a lot of money.
Right.
So look at that. That's the first thing. What kind of deductible are you carrying? Can you afford to come up with $1,000 should a disaster happen? If there's a $15,000 claim, can you afford to come up with the first $1,000? If you can, that should be the first thing you look for.
Okay.
Because you should share in the risk. Really, you should. Oh, and it's a big help premium-wise. And when you look at it over a long period of time, you're giving the insurance company more money by using a lower deductible. You're paying them over a long period of time a lot more than you should. Okay. So that's the first thing I would look at. Second thing, and we talked about those other structures, update that. What do you got?
Just to update if you didn't catch the last show.
Update it. Absolutely.
Other structures are
Look at it. What do you have? Other structures are anything unattached to the house. The garage is that is the area most affected. Remember, if you have $300,000 on your house and you have $10,000 on your garage and it costs $25,000 to replace your garage because it burned to the ground, what happens? You get $10,000. You don't get to make up to that $300,000. That's where people look at it and say, well, I got it on my dwelling. No, you have it. It's a separate coverage.
So anything
Take
unattached.
Absolutely.
Okay, update it.
Update it. Personal property. Have you bought any new jewelry? Have you bought a watch that's significant in value? There are ways, and we didn't talk about, when we talked about special articles covered, with jewelry and with things like that.
Watches.
Yes. If it's mysterious disappearance that's the cause, there are ways to cover that.
What about an heirloom?
Cover it. Look at it. Look at its value. Update its value. Okay? If it's not a value to you, then move it on. Don't you don't have to, but I would say to you, the watches, the rings, stuff like that is if it has changed, if it's new, cover it.
Okay.
Liability, we talked, I can't emphasize that more. Make sure you evaluate your asset position, what it is you have, and what can be taken from you.
And that includes
and
pensions,
it could be
your
anything,
stock.
any asset you have can, in some way, don't take it for granted. I'm not saying to you it's easy to get at. I'm saying to you, don't take it for granted that it cannot be taken from you. Protect it, have the peace of mind, that's needed.
Okay.
And we're going to return in about a minute with a lot more information for you, and we got a lot to cover yet.
Yeah, we're going to save you money. Ways to save you money. Promise that on the show we talk about it. You're watching Know Your Insurance right here on SSP TV. You're watching SSP TV, Know Your Insurance, and the topic today is homeowners insurance. And Gary was talking about, changes in the way companies insure, which I was kind of asking you during the break. What does that mean exactly to me, the customer?
Yeah, that's a great question, Jeannine. This industry has just changed so much. The last 3-4 years, it has drastically changed. Here's the best way I could describe this. Most CEOs wake up in the morning and they turn on the news and they look at the stock flicks. They want to see the numbers of what the price of the stock is of the company and what's changed in the market and things like that. Typically, our CEO looks at the weather forecast every day across the nation.
Right.
Because that's where the profitability is.
Right.
If you're going to have a potential for a claim, and I'll be honest with you, I do that 3 times a day almost.
Really?
I'm constantly looking at the weather, because if there's a change in a weather pattern, it's especially in the summertime when it's real warm and a cold front comes through and it comes through too quick, now you have severe thunderstorms, you have water damage, you have hail, you have all those things that are unexpected, and that changes the way you do business totally. That has changed now in how the companies have, how the wording in a policy reads. It's changed drastically. Okay.
So what's an example of that?
Let me give you an example. This is the biggest one today, and that is roof coverage. Okay. If you have an older homeowner policy and you have replacement cost, it typically covers your roof for replacement cost. So you're 20 years into your policy, and your roof is 20 years old, and we get that hailstorm we talked about. And that's not uncommon around here. You know, it's about every 3 years now we're seeing something, okay? Hail damages your roof. Well, first of all, why does hail damage a roof? More likely than not, it damages it because it's aged.
Okay.
The weaker a roof becomes, the weaker that grid on the roof becomes, the more apt it is to be damaged. The more apt it becomes that a company pays a claim. So if you have a 20-year-old roof versus a 10-year-old roof, that 10-year-old roof is still solid. Chances are it's not going to be damaged by that hail, that light hailstorm. But if it's 20 years old, it has a much greater chance. So what we're seeing in our business is that's changed. We have wording in policies now that says, okay, if your roof is more than 15 years old, we're going to base replacement cost on your roof on actual cash value. Again, going back to that phrase again, replacement cost minus depreciation. So if you have a 20-year-old roof and you depreciate it, its value is a whole lot less.
Right.
And the insurance company would pay a whole lot less for the claim. So those are things that we're seeing big time changes, okay? That's one. Second thing is that replacement cost. You know, insurance companies weren't so worried about how much it costs to replace a structure until of recent, when so many homes, the wildfires in the West were a primary example of that, where, you know, homes were insured for $400,000 or $500,000, but yet the customer went to replace it and it cost $800,000. Okay, well, that's why that Marshall, Swiss and Beck formula came into play. That's why there's geographical changes in what it is to replace a home. So
know what the changes are and how the companies are insuring
absolutely, and
us.
what it's going to take to replace the house. That has changed drastically. The cost per thousand has changed immensely, okay? That the cost of a homeowner's insurance has changed immensely in the last couple of years. So, you know, there are things that you can do to lower that, but it's changed. How, you know, what and how can you make that, those changes help you?
So you have less coverage for the same amount of money.
Maybe not so much less coverage, but how about a higher deductible?
Okay.
Because now
like
you're sharing in more of the risk.
Mm-hmm.
You know, if you have a $1,000 deductible versus that $100, it's a huge difference. There are so many changes, but it's important to know what they are and be able to know that, hey, this is what my policy covers. Do I have peace of mind making the changes that I need to make?
Okay. Now, you promised we were going to talk about ways to save us money. Are we there yet?
Yeah, I think we're just about there.
Because everyone's interested in saving money, right?
I think we're, you know, probably on our next show we'll talk about how to prevent claims.
Okay.
We might bring some. I think we're going to bring some special guests in from the fire departments to talk about that. Okay. But let's talk about how you could save money. And
definitely.
That's really,
is everyone listening?
Really, really important. Look at every coverage. Number one, look at every coverage. There's a thing called select value, or you determine how much coverage you want on a home.
Okay.
You can lower your premium by choosing the amount of coverage you want on the home. Is that a good thing to do? Probably not, okay? I say probably, and there are many examples that can help, but it's worth looking at. Here's the problem. You say, okay, I have a house that's replacement cost $500,000. I want to insure it for $300,000. I don't want one more penny, $300,000. Okay, will you pay less? Sure. But will you pay much less? Probably not. That disparity, the $500,000 is still taken into account, but it's a way you can lower your premium. I wanted to bring that up because a lot of people come in and say, listen, I don't care. I want to insure it for what I want to insure it for. It's not that easy anymore, and it's not as cheap, but it can save you money. Biggest factor on saving money.
Wait, so it can save you money, but it might not be the best thing for you.
It might not be the best thing for you. You need to get the proper advice on that. Okay. You need to get is it right? Second thing is looking at your dwelling coverage. Are you over-insuring it? You asked me on the break. Is there such thing as having too much coverage?
Right.
Sure there is. If the replacement cost of your home turns out to be a lot less, really, when you put it on paper, when you run it through the calculator again, if it turns out to be a lot less,
the official
and
calculator,
you're over insuring it, there's opportunity there for you to bring it down to what it would cost to replace the coverage. Many people don't realize that. They need to review it. There's an automatic rider on many policies. Inflation, it just keeps adding and adding and adding. Well, sometimes that gets it overtakes where it should be, and there's too much coverage on the house.
So you can actually ask if you're overinsured.
Talk to your agent. Make sure you got the right thing. Another thing, how about your contents coverage? Maybe you're a single person living in a home that's big, and you don't have as much in personal property.
Right.
There are ways you can reduce your personal property on some policies, not every policy, but on some policies you can reduce your personal property and get a price break. Okay, so you may be able to reduce your premium by doing that. Okay, looking at every angle of coverage is really important. The liability, that's something I don't think we should even talk about because it's not a reduction area. Okay. The liability, I would say, more so than not, your liability probably should increase rather than decreasing.
All right. When we come back, what do you need to do to prevent claims? Right. That's very important.
Absolutely.
Okay.
To prevent claims, and we're going to talk again. We're going to touch briefly on the kindness revolution.
All right, we'll be right back. You're watching Know Your Insurance right here on SSP TV. We're talking about homeowners insurance here on Know Your Insurance with Gary McNealis of Allstate, and we're talking about preventing claims. There's a lot of things that happen on your property that you might not be aware of that you should be aware of when you're looking to do your homeowners insurance.
Yes. Inspections of homes is another major change.
Right.
And that leads us right to what
there's
you can do.
Just thinking about them during the break of what could go wrong and some of the questions that, I had.
Absolutely. And, there's one, I think, false thought out there. There's one myth, and that is that once you have a house insured by an insurance company, you're good. You don't have to worry. And that is sometimes it's true, but an insurance company can come out and inspect your property really and truly because they're at the risk at any time. Okay. And I think everybody at home needs to know that an insurance company can cancel you. Even though you've been with them for a long time, they can cancel you for a significant change in risk.
Okay.
Okay? Significant change in risk can be a lot of different things. We're not going to get into that. What we're going to get into really is, how do I prevent the claim from happening? And if you take just these few things and use them, I think that could get you to the part of, if an inspection came about, you wouldn't have to worry.
All right, so let's ask some questions. If a vehicle is parked in your driveway, now I know you have vehicle insurance, auto insurance, but is the vehicle covered on your insurance for your homeowner's insurance?
Great question, because if your vehicle is registered and you have insurance on it, you should be okay. However, you may not have full coverage, so that's another story. Or you may not even have it registered, so you have no insurance on it. You say, okay, I'm not going to worry about it. If my house burns down and the car burns with it, my classic car, it'll be covered. Wrong.
Wrong.
Homeowner policies specifically exclude motorized vehicles unless they're used for work around the property. And when I say work around the property, I'm not talking about an old car.
What about like a bulldozer, a lawnmower?
You say a bulldozer, you're on the line there. That's a fine thing, because a bulldozer can be covered if it's specifically used for your property. If you use it for business,
well, say I have friends who they cut wood and they heat their house with their wood, so they use it.
If it's used for the property, you should be okay. And I say should, unless the wording is changed in the policy, unless there's something, some exclusion. But, your tractor. And you want to be careful. We said we want to make sure you have the right things you're looking for. Some policies limit the amount of coverage that it provides for the motor vehicle, the motorized vehicle used for your property. Like, for example, a tractor only up to $5,000. Well, there are a lot of lawn tractors out there more than $5,000. What does your policy cover, and is it right for you?
What if you have a couple of vehicles that are just abandoned vehicles on your property?
Not covered. That's a motorized vehicle on your homeowners, not covered. Not covered under your under the typical auto policy either, if there's no coverage on them, you know, if you don't have them listed. But that's something a lot of people take for granted. Here's one beyond that. What if the car's in your garage? What if you have a car in your garage, no plates on it, but you know what? You have every intention, and we have so many classic cars out there. People say, oh, I got a 67 Camaro sitting in the garage. You know what? I just have a little bit more work to go on it. I'm putting a new motor in it. But you know what? I already have $20,000 into it. The garage burns down. Are you covered? And the answer to that is no. That falls under the motorized vehicle situation. It's not used for your property. And if you don't have that insured specifically on an automobile policy of some kind, whether it be a classic policy or regular, then there's no coverage.
Okay. So again, you need vehicle coverage. Pools, big one.
Swimming pools.
Prevent claims. There are so many times you see these pools and they're not gated off. They have the ladder inside. They don't
Lots
have
of things.
There are so many things you could get in trouble with in-ground or above-ground pools.
Jeannine, this is one that we see many, many times now on inspections. We're out there inspecting almost, in fact, most insurance companies inspect every new piece of property that comes in the door. So we see a swimming pool, we look to say, number one, how safe is it? Are you doing everything you can to prevent a disaster, to prevent someone from tripping and falling, from slipping and falling, from getting in there when you're not home? Are you doing everything in your power, in your control to make sure of that? So think about that. You know, if you were to look at the overlying theme or underlying theme here, that's what it is. The fence with the locking gate is extremely important, especially on an in-ground pool. Can someone get into that pool when you're not home, when you're sleeping, when you're there? Okay, what happens? Are the gates kept closed? Do they have preventable locks? Okay, child preventable locks from opening the child from getting into the pool, jumping in. They don't know how to swim, or they do know how to swim, and God forbid something happens. They bump their head, whatever. Preventing that lawsuit from happening. What happens when they do get their feet wet and they slide on the concrete? You know, do you have a sliding board? Do you have a diving board? You know, how safe is it? It will determine if the company's going to insure the pool. Many companies are saying no diving boards today. If you don't have, because you know most pools with diving boards have lifeguards. Well, if there's no lifeguard, that's a problem. Okay?
What about if the pool is attached to the deck?
The pool, the idea is a locking gate. So if you have steps, steps should come up. They should lock up that nobody could pull them down. It should be fencing high enough that people can't get in there. Think about that. If you have an above ground, lower ground, all of these things. It includes it all, because this is a big area for lawsuits.
All right, pets. Those of you who have pets, big one.
Okay. Question on the on the homeowner application is: do you have any dogs? What breed is the dog? If you have a vicious type breed, okay, and there are certain breeds that are just excludable,
right?
Okay, you know, you can say all you want. I have the nicest dog. My dog is the most calm dog. But guess what? If it falls into the unacceptable breed category, an insurance company can reject coverage all the way. So what happens if you got the dog after you got the policy and the insurance company didn't know about it? Okay, yeah, you could have the nicest dog, but what if he bites somebody? Now you have a significant change of risk. You risk being canceled, okay? Don't think that just because you bought it after the policy...
Think about that. You don't think about if you're getting a dog that it's going to change your homeowner's insurance.
Yes. So, you know, we're not saying...
This is just for dogs now.
This is just dogs are specifically named on the application. If you have one that's on that unacceptable breed, talk to your insurance agent. Hey, I'm thinking about getting a dog. What happens if I get a pit bull?
Right.
You know,
Okay.
what happens if I get a Doberman? What happens if I get a Rottweiler? I'm not saying they're all vicious breed. I'm saying to you, ask the question, and then it'll determine how far.
There's a lot of preventive claims that you could, take care of your sidewalks and your roofs and your windows. But we have 30 seconds, and we keep forgetting about the Pay It Forward campaign that we want to talk about.
Yes. We started this a few months ago. It's called the Kindness Revolution. This is the wristband that we ask people to wear that have done something nice for someone. This could be anything. It could be, this involves children, a child doing something nice for an older person. You helped open a door. You helped carry groceries. You helped people in need in any way, shape, or form. You stopped to help someone with a flat tire. Anything is an act of kindness. We ask you to take it seriously and make a difference in society. Because if you do one thing today to help someone, the next person sees it and it then becomes contagious, and that's what it's all about. It's being kind. It's about making a difference in the life of someone else. And this is a great thing, and we ask you to make that difference.
And they can pick them up where?
Pick them up right here in our agency in Hazleton, at the 22nd Street Plaza, or in our office in Tamaqua, 232 Pine Street, the old P&B Sporting Goods building. Please stop by, pick them up, get a handful of them, pass them out to people you've seen doing an act.
Totally free, no gimmick, no money involved here.
Nothing. This is just an act of kindness.
All right, Gary, thank you so much, and thank you for watching us here on Know Your Insurance on SSP TV.